Good morning, everybody. Hope you're doing well today. It is Tuesday, December 12th. Hey, remember yesterday I told you that I was sitting in class all day. Well, I'm not done. I still have 2 more days to go, but you can see here tax season updates. We're looking at different things that are happening and some of the changes that are happening with yesterday was EVs, electronic vehicle changes. There's some changes to credits there. We talked about required minimum distributions, inherited IRAs, as well as a secure plan, so secure act. So, hey, a lot of good information yesterday. We got more coming today. So, hope you'll hang with us as we kind of get started today. We'll talk to Dave here in just a few seconds. Before we do that, though, let's not forget that there are so many things in this world that you and I we have no control over. However, you can take control of your investment portfolio. To do that, though, you need to know how much risk you have in your portfolio, and you need to know what that risk should be and how much it should be. And that's exactly why I developed the core retirement design to help determine the amount of risk you should have in your portfolio. Give us a call, 863-382-0037 to get started with your core retirement analysis. Hey, with that, we got Dave coming up next.
Keys there, that is, falling. We're at 8:41 now, 19 before 9. Time to check in on your money and see what's going on. Boy, it's a really good time on the stock markets at the moment. Let's check in with Phillip Statler from Statler Financial Services and see what his take is on the matter. Phillip, good morning. How are you today?
Good morning, Dave. Hey, doing well today. Yesterday was, can we just say, probably a banner day yesterday.
Yeah, I'm tempted to say irrational exuberance, but yeah, we hit new intraday highs in the indexes. The Dow closed at 36,405, up 100, and let's see, make sure I'm on my right numbers here. Yeah, there we go, up 156 points on the Dow. The S&P was up $18. That's up to 46.22. NASDAQ at 14,432, up 28.5 yesterday. And, everything's coming up roses. New intraday highs on the market. And according to what I'm looking at on the futures, if they stay where they're at, we're going to open at a record high on the Dow today.
Yeah, it's looking that way, Dave. And all the indexes actually hit, I think, 52-week highs yesterday.
Yep. Yeah, no, we're looking pretty good. And then, like I said, I think the Dow will open at an all-time high if it stays with the futures numbers that we've got this morning so far. The interesting part is we're not buying the companies everybody talks about anymore, are we?
Well, it's kind of interesting. In that move yesterday, I was reading an article that said that basically something remarkable happened yesterday, and extremely rare was the headline. All the indexes were in great positive territory. However, the Magnificent Seven all lost their shine yesterday. Everything was down 1% or more, except for Microsoft. Microsoft was down about almost 0.8%. You had Facebook or Meta down 2.25%. You had Apple down almost 1.3%. Amazon down a little over 1%. Google down 1.25%. Tesla down almost 1.7%. So Nvidia down almost 1.9 yesterday. So, those stocks usually do well, but they did the exact opposite of what the indexes did yesterday.
That's kind of interesting because those really are the glamour stocks that everybody talks about buying the crud out of, and to end up coming up with a new intraday high in the process without even including the glamour stocks that have been driving the market. You take those Magnificent Seven and a bunch of them together end up there. I think I remember that's like 30% of the full capitalization in the Standard & Poor's 500. So we're talking about a major sea shift there, aren't we?
We really are. Let's see what happens today as we're getting some nice numbers for the markets to open today.
Absolutely. The macro big news that comes out at 8:30 this morning was the consumer price index, the inflation rate. And while the core did just about what everybody expected, it was up 0.3%. We don't have an official one-year number, but if you annualize 0.3, that's 3.6% inflation if we take this month as a snapshot. That's about what they expected. The overall headline CPI, they were expecting the decrease in gas prices to drag it down. It was up 0.1%, which, okay, fine. They expected 0. We got 0.1. That's at least within the right zip code. Inflation is trending in the right direction, and I'm counting that as relatively good news.
I think so, Dave. I think that's some good news. And that kind of points to the article you and I were reading on CNBC about what they think interest rates are going to do next year.
Yeah, a whole bunch of talking heads, and I emphasize these are the talking heads economists, and we always make fun of them a little bit because they go out on a limb and predict something, and then if it happens, they say, see, I called it first. But they're saying that we could actually look at interest rate decreases in like 3 quarter-point decreases next year. And Paulson's been making noise saying, heck no, there's no way on God's green earth we're going to do that. So either Paulson is lying, which would be understandable because he doesn't really want to build in an increase into the market's expectations. But at the same time, if it actually happens, that's going to be like lighting a firecracker under the indexes, isn't it?
It is, and it kind of lends to an article I was reading yesterday. An economist and fund manager came out and said basically that he expects that that next year we should end up the year a little higher than what we are now, but it's going to be turbulent between now and then. There, he's calling for more than a 10% correction in the S&P 500, down below 4 to like 3960 during the first half of the year. And then interest rate cuts coming in the third quarter, kind of a soft landing on the recession side, but then bouncing back up the last half of the year and being able to finish up about 3% better than where we are right now.
And actually, while I still make fun of talking heads, that actually makes some sense because everything we're reading, we talk about the annual reports and the quarterly reports from these companies, almost to a company, the actual raw profit that they're delivering is lower in absolute numbers than it was a year or two ago. Eventually, the earnings per share standard is going to have to catch up with these guys, and something's got to end up correcting until their actual earnings catch up with their stock value.
Yeah, I think so. I mean, one of the things I've been, when I sit down with clients and talking to them is my prediction, if you will, is that I just felt like that by the time we get to the end of the first quarter next year, maybe second quarter, that whatever's going to happen should be pretty much done. And I've been talking about that now with clients for almost a year now, it seems like.
I've always poked a little good fun at you about being on the conservative side, not being the starry-eyed optimist. But this is one of those times where I tend to be on exactly the same page with you. It's hedge your bets because this, a 30 and 35 to 1 price earnings ratio on the trailing price earnings ratios, they don't last forever, people. I mean, eventually we're going to come down to earth, or the company's going to fix itself and the profits are going to catch up, one or the other.
No, that's right. There's it's a sum game, right? Eventually, they've got to kind of even out.
Absolutely, at some point. That's where we're sitting. I did notice the market, at the very least, is not particularly unhappy with that because Treasury yields are starting to fall like a rock, meaning we're hedging a little bit against what the market's going to end up doing. We're buying the Treasury bonds in order to stabilize things for a little bit to see what the market's reaction to the inflation figures are. I find that kind of interesting given the fact that the futures are still showing optimism. I wonder if they're just getting out of the Magnificent Seven for a while.
Well, yeah, it's not as optimistic as it was 20 minutes ago, Dave.
I kind of read that on my ticker, and I know you've got the real-time quotes, and I'm not really looking forward to them.
Yeah,
we got a bunch of reports coming in as we come at the end of earnings season here. We always watch the two toy makers, Mattel and Hasbro. Mattel this year has the hot property with Barbie. So I'm kind of assuming that means that Hasbro is not expecting to do as well as they'd hoped, right?
Well, Hasbro's not, and I'm not so sure if they reported. I didn't see actually an earnings report, but I did see this. They did announce that they are laying off about 1,100 workers, and they made a statement that the soft sales for toys, they expect to be continue into 2024. And so that's put some pressure on Hasbro this morning, trading down about 4.4%.
That industry does it more often than not seem to be a zero-sum game. Mattel is hot, Hasbro has problems. Hasbro gets hot, Mattel has problems. There's a zero-sum element on the toy buying business, isn't there?
Yeah, it definitely seems to be that way. And those are really the two main players in that industry.
Absolutely. I think they've got like an 85 share in terms of the actual gross dollars that get spent as far as traditional toys are concerned. So between the two of them, there is an element of zero sum. And this year, Mattel has Barbie, which is obviously the hot property for the year. Other things that are happening, this came out yesterday after we got done talking, but Oracle, one of the almost dinosaurs in the high-tech industry, they reported, and I gather they came up a little short, didn't they?
They did. They missed, especially on their revenue. They missed by $500 million, Dave.
Was that all?
Yeah, pretty big number there. But I will say their stock has had a good run this year, up more than 40% year to date. And so obviously that would lend to the fact that we're dipping down this morning, down 9.5% on Oracle. Right now it's trading about $104 a share.
Which still is not a cheap stock, even at 104 with a 9% drop, right?
Yeah, it's really not. Let's mention, we talked about Macy's yesterday.
Yeah.
I found this interesting. They're slipping a little bit this morning, down about 2.6%. But that on the information that Citi downgraded Macy to sell from neutral, and they're citing skepticism that this deal will actually happen.
Yeah, that's cold water, like maybe a whole bucket full, right?
Yeah.
Of course, if their stock keeps tanking, the money that they'll get offered at the end of the deal won't be as big either, so that might just queer the deal eventually, won't it?
Yep, that's right. So that's really all we have on the earnings front right now.
All righty. In that case, let's go back to the day yesterday. It was a pretty good day yesterday, and my delayed quotes really looked optimistic because if they started on my old delayed quotes this morning, we'd open up at an all-time high on the Dow. I kind of get the feeling we're leveling off. What are we doing 45 minutes early?
We are. It's still up, though, Dave. The Dow Jones is up a little over 0.2%. The S&P 500 is up less than 0.1% right now, like $2. And the NASDAQ 100 is up a little over 1%, or about $23. So it's green, just some of them are slightly green. On the other side of the coin, we got silver up almost 0.8%. Gold actually closed yesterday below 2,000. It's up a third right now, but it's still just barely. It's 2,000 and some change right now. So oil, though, was closed yesterday below 70. It's back up over there down by 1%. I'm sorry, it closed over that. It's at $70.55 now, down 1% right now.
Yes, under 71. Going to go out and buy a beer and celebrate or something. Put it in my gas tank.
There you go.
The overseas markets, Asian Rim market looked at us in our optimistic level and said, oh, okay, fine, things are going to be okay. Indexes in the Asian Rim, for the most part, are up considerably this morning in the 1/3 to 0.5% range. Mainland Chinese markets are not necessarily faring as well. Again, we've been talking about the Chinese economy being challenged. European markets are kind of responding conservatively to us. Most are up by a little bit, but there's enough down to be able to make the overall European index off by about 0.07%. We're not talking about a really impressive move right now, but it looks like the bloom's coming off their rose along with our future. Being able to look at the future as to what it could be, and we keep talking about what all the analysts are saying, and that tends to mean I want to risk. I got to pull the risk out of my retirement fund as soon as I can. How do I find you to do that?
That's right. That's why we developed the core retirement design to help people design that retirement they always dreamed of. Give us a call, 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. at noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here again for Wednesday, tomorrow morning here, same time on Light. You have a good day, Phillip.
All right, talk to you tomorrow.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Join us again tomorrow for your update. Until then, have a great day. Bye now.